Stock markets are rallying today as the central bank indicated they will be cutting interest rates or are more likely to cut interest rates in their next meeting and perhaps cut interest rates further still in future meetings. I know many of you were waiting for this signal from the Federal Reserve to start accumulating shares. And in that sentiment, I'm going to highlight 3 undervalued stocks you can buy now while the prices are low before prices increase as interest rate decreases tend to have the impact of lifting share prices. So without further ado, let me share with you these 3 undervalued stocks to buy. All right, the first undervalued stock to buy I'm going to highlight is Kimberly-Clark, the household goods company. The company is selling at a market price of $130 per share, $133 to be more precise, and I think that's undervalued given its intrinsic value. So to calculate its intrinsic value or fair value, I've created a proprietary discounted cash flow valuation model that I use to value businesses. For Kimberly-Clark, I forecasted its free cash flow between today and the very, very long run, and I calculated that the present value of those cash flows will total over $66 billion. The discount rate I've calculated for Kimberly-Clark, given its lower than average risk, is 6.3%. The next stock I'm going to highlight as being an undervalued stock you can buy now is PayPal. The similar calculation I made for PayPal again pointed to an undervalued business. The present value of all of the free cash flow I expect this business will generate between today and the very long run is just a little over $114 billion. The weighted average cost of capital is significantly higher for PayPal because it's a more risky business compared to Kimberly-Clark. The WACC, or weighted average cost of capital, I calculated at 12.03%. The next stock I'm going to highlight is SentinelOne, the cybersecurity company. The similar calculation I made for SentinelOne again points to an undervalued business. The current market price is $16.95. The intrinsic value per share I calculated is over $38. The present value of all of the free cash flow I expect this business will generate is over $11.5 billion. The weighted average cost of capital came to 8.8%. PayPal and Kimberly-Clark are selling at forward price to earnings ratios of less than 20. PayPal is especially cheap at a forward price to earnings of just 13. Kimberly-Clark at 17.5. Click the link below to watch the full video.